Hey viewers, if you own a rental property or run a business through an LLC, there's some important news you should know about. The Department of the Treasury's Financial Crimes Enforcement Network has introduced a new filing requirement. This means that if you're one of the viewers of a corporation, limited liability company, LLC, limited partnership, or any other type of business entity, you'll need to prepare for the Corporate Transparency Act, CTA. Starting January 1st, 2024, the CTA will come into effect for small businesses. This means that reporting for these businesses needs to be completed before January 1st, 2025. For new business entities that will be formed during 2024, there are specific requirements outlined in the Beware New 2024 Businesses and Rentals Trigger FinCEN Filings Guide. If your business is already in existence by January 1st, 2024, you'll need to file a Beneficial Owner Information (BOI) report with FinCEN by December 31st, 2024. It's essential to stay updated on these requirements to avoid penalties and ensure compliance. Here we go. It's crucial to pay attention because the government has implemented severe penalties for non-compliance with the Corporate Transparency Act, CTA. Here's what you need to know. You could face civil penalties for up to $500 for each day that a violation continues. These penalties can add up quickly, so it's essential to stay compliant. There are potential criminal penalties for up to $10,000 and/or imprisonment for up to 2 years for individuals who willfully provide false or fraudulent beneficial ownership information or fail to report complete or updated information to FinCEN. Fortunately, the government offers a 90-day grace period for correcting inaccurate or incomplete information in your Beneficial Owner Information (BOI) report. If you rectify any issues within this time frame, you can avoid civil and criminal liability. These penalties highlight the importance of timely and accurate reporting to FinCEN to ensure compliance with the CTA and avoid facing legal consequences. How many existing businesses and rental property owners will be affected by this new federal filing requirement? About 32 million. In 2021, Congress introduced the Corporate Transparency Act, CTA, to address issues like money laundering and tax evasion through anonymous shell companies. The CTA requires businesses to file a Beneficial Owner Information (BOI) report with FinCEN revealing the individuals running the company. This information goes into a FinCEN database accessible only to authorized parties like law enforcement, the IRS, national security agencies, and financial institutes with company consent. Importantly, the database doesn't disclose financial details, ensuring transparency without revealing sensitive financial information to the public or private creditors. The Corporate Transparency Act, CTA, focuses mainly on smaller businesses not heavily regulated by the government. Businesses formed through state filings like Articles of Incorporation or Organization fall under the CTA, such as LLCs, corporations, limited partnership, and limited liability partnerships. Sole proprietors are exempt since they operate solo. However, single-member LLCs, even if TaxTics sole proprietorships, are included because of their state filing. General partnerships are generally exempt except in states like Delaware or if they voluntarily file in California. Foreign entities entering the US market through state filings are also covered by the CTA. Here's a more controversial breakdown of the exemptions from the Corporate Transparency Act, CTA. Alright, so not every business has to worry about the CTA. If your business falls into one of these categories, you can breathe easy and forget about the CTA requirements. Number 1. If your business has more than 20 full-time employees who work over 30 hours a week, made $5 million or more in domestic gross receipts or sales in last year's tax return, and had a physical presence in the US, you're exempt. Number 2. You don't have to file a BOI report if your business was formed before 2020 and is currently inactive. Inactive means it was around before January 1st, 2020, isn't doing active business, isn't owned by a foreign person, hasn't changed ownership in the past year, hasn't dealt with more than $1,000 in transactions in the last 12 months, and doesn't hold any assets in the US or abroad. Number 3. Certain businesses are already heavily regulated, so they're exempt from the CTA. This includes publicly traded corporations, businesses with securities registered with the US, Securities and Exchange Commissions, investment funds, investment advisors, registered broker-dealers, banks, money transmitting businesses, credit unions, insurance companies, accounting firms, and venture capital fund advisors. Also, tax-exempt nonprofits like Section 501c3 corporations and Section 527 political organizations don't have to worry about the CTA. So if your business fits into any of these categories, you can relax. The CTA doesn't apply to you. Identifying beneficial owners for a BOI report can be straightforward for most businesses, but complex for those with intricate ownership structures. Beneficial owners are individuals who own or control a reporting company. not entities like LLCs or corporations. If the company is owned by a business entity, list the human owners of that entity. Two types of beneficial owners are those with at least 25% ownership and those exerting substantial control. Ownership is determined by comparing stakes against local interests, with anyone at 25% or more being a beneficial owner. Substantial control includes senior officers, decision influencers, and others with significant influence. Exemptions exist for minors, nominees, certain employees, heirs, and creditors not meeting control thresholds. When unsure about control, it's best to include them in the BOI report. If your business falls under the Corporate Transparency Act (CTA), you're considered a reporting company and must file a Beneficial Owner Information BOI report with FinCEN by December 31st, 2024. For each beneficial owner, you'll need their full legal name, date of birth, current residential address, and a unique identifying number from an accepted document. Make sure to include an image of that document. Your company's info required in the report includes its legal name, main business address, formation jurisdiction, and IRS taxpayer identification number. You'll file this online fee through FinCEN's BOSS database starting January 1, 2024, and there's no filing fee. Your company's Beneficial Owner Information BOI report doesn't have an expiration date and doesn't need to be renewed. However, it's important to keep it up to date by updating it within 30 days if any information changes. For instance, if there's a change in your residential address or if a new beneficial owner joins the company, you must update the BOI report promptly. If a beneficial owner passes away, the update should be made within 30 days after settling the estate. Having beneficial owners obtain a FinCEN identifier and including it in the BOI report has its perks. The owner becomes responsible for maintaining the information with FinCEN, including reporting address changes within 30 days directly to FinCEN. If your reporting company becomes exempt from the CTA criteria after filing the initial BOI report, you'll need to submit an updated report stating that your company is no longer subject to reporting requirements. If you're the sole owner of an LLC or a single shareholder in a corporation, you're responsible for the CTA compliance without needing to amend your LLC or corporate documents. For businesses with multiple owners such as LLCs or corporations, it's crucial to empt CTA compliance terms in their governing documents like operating agreements or bylaws. These agreements should ensure each other commits to CTA compliance or proves exemption, promises ongoing compliance, indemnifies the company against non-compliance risks, and consents to share information with FinCEN as required. The Corporate Transparency Act, set to be enforced from January 1st, 2024, mandates non-exempt companies born in 2023 or earlier to submit a Beneficial Owner Information BOI report to FinCEN between January 1 and December 31st, 2024. However, exemptions are provided for certain businesses, such as those with 20 or more employees and $5 million in annual income, as well as heavily regulated entities like publicly traded companies. The BOI report must detail the identities and contact information of all beneficial owners who control 25% of ownership interests or exercise substantial control over the entity. That's it from here. Subscribe now to stay updated on the latest regulatory changes and compliance requirements affecting your business operations. Till then, take care.